Hello and welcome. This is Paul Pappas from Mortgage Choice. As a first home buyer, it is very common for you to be engaging in conversation with your various family members, your parents in particular, about buying your first property and what your aspirations are. And they might be wanting to help you. How can they do so? It is very common these days for family members to be wanting to help you, especially with the increasing value of city property prices and the inability in some cases or difficulty of first home buyers being able to obtain deposit and get into that that property market for the very first time. So how can family members assist by way of a family pledge or a guarantor support loan, as that can also be called? The same principles apply. Essentially what happens here is this, and that is that the family member is providing security support to your borrowing, to your loan. They are only providing security support. You have to be able to afford the loan yourself. In other words, your family members can't chip in $1,000 a month or whatever the case might be in terms of helping you service the loan. They can only provide you with a guarantor support, to assist you with your deposit and so forth. So the critical thing is here, and that is that your family member provides a guarantor or mortgage support, but not support in terms of your repayment capacity or borrowing capacity. You have to be able to service the loan in your own right. And that's for legal reasons and many other reasons as well. So what are the benefits of family guarantor loans? Well, clearly, it allows you to be able to borrow a lot sooner than what you would like, than what you would have thought, I should say. So a massive advantage here, because you don't necessarily have to save for that 5 or 20% deposit that you thought that you really needed to. So even if you don't have a deposit, you can buy into the market now. So it allows you to buy sooner. You avoid mortgage insurance altogether. And we have a separate module and video on mortgage insurance, what that is. But the cost of that mortgage insurance is not required when you have a family guarantor loan. So that can save you a significant amount of money. And usually the reason why guarantors or family members assist you. It can maximize the amount that you can borrow, because obviously you're not having to pay for the mortgage insurance or borrow that amount. So you're maximizing how much you can spend. Of course, with anything, there are some negatives here, right? You do need to have lending support in the sense that your parents have to mortgage their property. We will only deal with what we call limited liability mortgages, and we do need to talk to you and your parents about what we mean by that. But we certainly, briefly what we're getting at here is this, and that is we will only recommend loan products where the mortgage being offered by your parents is limited to a particular amount, and therefore that the recourse that the lender has against your parents' property is also limited. The main recourse that the lender has in a default situation is the property you're purchasing. So we're not exposing you, we're not fully exposing your parents' hard-earned asset. A consideration that your parents need to take into account is it might restrict their ability to be able to borrow money, and of course siblings and other family members need to come into play here as well. So it is very important that you assess these pros and cons. Our general advice is this, and that is these applications are very, very complex, especially if your parents would prefer to provide a guarantee support as opposed to a gift of some kind. So they are complex, and we do need to talk to all parties concerned. They do tend to take longer for a pre-approval, so talk to us at the early stages. We prefer that guarantors or your parents have other assets as well, or they're self-funded retirees, and so they're not necessarily mortgaging their principal place of residence whilst they're on the pension at a retirement stage. That's something that we would prefer not to do for I suppose, some very obvious reasons. A lot of lenders these days do require your parents to obtain independent legal and financial advice so that they fully understand their obligations. To be perfectly honest, we would want to be talking to your parents as well so that they fully understand the obligations that they're doing. Apart from the fact that they're obviously here to help you and buy your first property, which is fantastic. they do need to understand the risks involved to them, and the negatives as well as the benefits. We do need to talk to you and your parents, as I've said before, about the pros and cons of all this, and the loan types that meet your requirements, because there are different types of family support loans that are out there. Some of them we recommend, some of them that we don't recommend. So please do talk to us in terms of the various loan products that would best suit you. As always, do seek our advice. We're here to help you. So thank you for attending, and well done. Thanks.